Good evening, everyone. This is Regina Gibbons, and we are here live for our Parent Power Series. This is the first one for January 2026, and we are so excited to be here, back at it, getting ready to get into some real good stuff. Our Parent Power Series tonight, we will be talking about first-time home buyers. January, we do our vision boards, we set our goals, we get ready for the upcoming year. So this fits right on time with any of those goals because I'm sure there are some people out there who are looking to buy a home. And I will tell you this, get your paper, get your pencils, get your crayons, get your markers, get your chalk, whatever it is you need to do to take notes, to write down some of the information. I need you to make sure that you do that tonight, because one thing we can't do in 2026 is say that we do not know. That's not going to be our answer. We do not know. We will have every opportunity to know everything that there is to know about being a first-time home buyer. As you see, it's from dream to doorstep. So from that first initial thought all the way to getting your keys and walking in the door, you're going to be able to find all that out tonight. As always, if you have questions, please put them in the chat. We will do our best to make sure that we get them answered. And if we don't get them answered tonight and I see them later, I will make sure that I get the answers for you and get back to you through the same Facebook chat. So invite your friends, invite your sisters, invite your family, anybody you need to invite to jump on this Parent Power Series. I'm telling you, you will not regret it. So without further ado, I am going to introduce to you Miss Janae Lamondu Price, and she could tell you a little bit about herself. And we also have an extra special guest. So we'll get into all of that. So Miss Janae, take it away.
Hello, everybody. I am so glad that it's the new year, that it's time for people, that people are starting to think about the rest of the year and what's going on in the future. My name is Janae Lamondu Price. I'm a realtor licensed in DC, Maryland, and Virginia. And I'm also a board member of Why Not Inc. And we're excited to be bringing out this Parent Power Series the first time, as Regina has mentioned, for the new year, to invite you all to consider and think about the home buying process. Feel free to ask questions, put it in the chat. We're going to just have a moment to really, talk about it. And I'm also excited to have partnered with Azita Avron from Passport Title that is going to also join in, talk to us, answer questions about that closing and getting prepared and what happens during escrow and title and all of those great things that come into the home buying process. So hi, Azita. Thanks for joining us.
How are you? Thank you for having me. My pleasure to be here.
So we're going to just jump right in. And Regina, I'm going to ask you to kind of keep me on timeline if you don't mind, because we get to talking about this very important process. And, I get carried away. So,
Yeah.
So I'm glad everybody's here to join us. Well, why home ownership matters. We can easily say stability for families, and definitely within the community of the Why Not community and all those out there that are considering buying homes, you want that stability for yourself, for your family, and moving forward. So it's always a great thing to consider, to think about, and to prepare for. Predictable housing cost. One thing about it, you don't have to worry sometimes. You do have some things that will change. As Azita's going to talk a little bit about that. Your escrow can change based on some things and items and things like that. But one thing, once you go into this purchase of a home, that you do have a lot more predictability than you do with the rental market out there. And so we'll talk a little bit more about that as time goes on. Pride of ownership. One of the things that I've enjoyed about being a homeowner is being able to fix my house up and my investment the way that I want to put that personal style, that personal taste into it, and to build that equity for myself and my family as we move forward, which leads me into generational wealth. Again, a wonderful thing that I know that I'm building equity, that I'm building something that I can pass on as the generations go on for whatever reason. And I've also been a beneficiary of generational wealth through my family members, grandparents passing away and holding on to property and being able to sell that and it coming down to me as one of the heirs of that property. So it helped me afford to do some things and make some steps in my life moving forward. And I'd like to be able to give that to the generations that are coming after me. So tonight's agenda, what we're going to talk about is how the home buying process works. Credit, financing readiness, closing and escrow. We got some assistance programs that I'll touch on a little bit that are happening in Maryland, DC, and Virginia. And then the next steps, getting ready. All right. So the home buying process, the home buying journey, financial readiness. Well, there's a lot of steps to that. And forgive me, I'm moving around a little bit here. So Regina, just interrupt me if I get off target. You need to be prepared. And a lot of times that's the scariest process. And many times home buyers don't believe that they're ready when they are. They're closer than they really think they are. And we are afraid to take that first step. So I want to just talk about that part because you're going to hear me say this. You don't need perfect credit, but you do need to know what it is you need to have in order to be prepared. Then there's the pre-approval process. We'll talk a bit about that too. Getting pre-approval and the difference between pre-approval and pre-qualification, house hunting, and how that works and all, and getting ready for that. Preparing to present your offer and sort of what happens with that, inspections and appraisals, closing, and of course getting your keys. All right. So credit worthiness, credit flexibility. Many times we feel that you need, and I'm sorry, I don't have all my notes in front of me, so I'm just going to go for it. There is flexibility, and a lot of times we believe that our income is the only thing that matters, or our great credit, having that great credit score is the only thing that matters. But actually, there's a debt to income ratio that comes in, and having stable income is what you want to have in order to get into being ready for purchasing a home. So if you've been on your job for at least 2 years, or even if you've been in the same career for 2 years or more, and so say you're a registered nurse and you may have moved recently within the last 6 months from one hospital institution to another one, yet you still have the same profession and you can prove that that income stream is going, then you're getting there, you're ready, and you're probably more ready than you are. And then sometimes it's the dual income that you want to consider as well. It may be yourself and your spouse, it may be just you by yourself, and making certain that you have you know what flexibility that you have in preparing for home ownership. So the difference between pre-approval and pre-qualification, okay? Pre-qualification is an estimate of what you're qualified for. A pre-approval is verified, and it is more powerful to a seller going in. If they look at a buyer that has a pre-approval by the lender, they know that that lender has gone through the approval process. The lender has looked at all of their bank statements, their W-2s, their other assets and all of that, and have really given them some solid approval information that identifies that this person is ready. They will, after they've done all that, provide you with a letter, a pre-approval letter. When you put your offer in, that letter is presented as part of your offer, and sellers care about that because it shows them that you have gone through the process and you have a stronger application process. You have a stronger chance of the financing not falling through while in the middle of the deal. There are several time elements that are met once the once your application, and I say application, but your um, you've submitted for the home that you want to purchase. And so some of the steps and the time steps that your realtor will help you assess would be how long that it's going to take you to get that approval. So before you go into um, getting underwriting, and that's when they really go into verifying all of that. A lot of times, a pre-approval will take some of those steps away because it's almost like a pre-underwriting. But I have had times where you're still going to go into underwriting, and there'll be more questions that are asked. And time, it depends on how long from the time you first got pre-approved to the time that we've submitted an offer on a home. Some of the information may have to be submitted. And so, again, take the fear out of it. You know what's going to happen. We're getting prepared, and your lender and your realtor will get prepared and in that process. But sellers do care about that because it gives a stronger, they're ready to, they're putting their house on the market, and you're maybe not the only person that has submitted an offer for that home. So when they look at an offer, they're going to be looking at how strong your offer is, and your pre-approval matters. It strengthens that offer. So there are several types of mortgages, and I want to just start out with a caveat to say I am not a lender. I'm a realtor. Okay, and so I don't give financial advice. The lender would do that, but I guide you through the process. I work hand in hand as a realtor with your, and your realtor should be able to do that as well with your lender, whether it's a lender that they have suggested to you because they've worked with that lender in the past. They know what programs that lender may offer. All of those things that could help you. You may select to go with that, or you have an options to go with your own lender, a lender that you have already gone through. Your bank could be one of them, or what have you. But they will tell you there are certain types of loans that you can qualify for. There's a conventional loan, which is 10% or more down payment of the home that you're looking for. Then there's the FHA, which is a Federal Housing Authority loan that allows, especially first-time home buyers, to be able to go into a loan, go into a home ownership with less down payment. And that's federally backed loan. Although the creditor is going to, your lender is the creditor, but it's a FHA loan package, and they're able to do that. And then there are the fixed rate loans that will lock you in at a certain rate, and but even the FHA loans and some conventional loans can be variable or fixed rate. So you've got some options as you're going into it. All right, so house hunting reality check. All right, what to expect. Now you're working with your realtor, and you've been online, you've been to homes.com, you've been on Zillow, you've done all the, you've been driven down every street in the community and seen all the houses that are there for sale, and now you want to know, okay, what is it that I want? And what is it that I need? And that is a real conversation that you need to have multiple times with yourself and with your partner. If you're looking to purchase with a partner, have it with your whole family, your children and all, because they can come up with some really great things. You feel like, well, they don't matter because I'm the one paying for it, and so they're just going to live with what I have. And then all of a sudden you realize that you've got a couple of kids that are going to be graduating from school in a couple of years, and they're going to be moving out on their own. And now you've got some extra room and space, and so you've got what am I going to do with all of this space? Do I really need this much space now that they're graduating or they're going to be leaving? What about bathrooms? How many bathrooms do I need? Is having a garage really important? What about all those stairs? Can I deal with 4 levels? Am I going to be able to really handle something that's 3,000 square feet? Do I really have to have that much space? Or is 1,500 square feet enough? Maybe that's not enough. So you really want to sit down and think about what your needs are and what your wants are. And go ahead and map all that out, write it down, talk about it, and then you're going to multiple times as you start looking through the market, really go through what you can eliminate or what you can add and what's most important to you. Sometimes there are things that are not negotiable. It's you got to have it. Um, and it's just you so as you start conveying that information to your realtor and looking at it, then you can narrow down some of the options. Sometimes it's just a matter of, I want a detached home. I want a yard and all of that. But the market, I can deal with a townhome and I still have a yard and I don't have as much to worry about as far as upkeep and all, because, they're going to take care of a lot of that. And then there's budget discipline. As you get that pre-approval letter and you see what it is that you qualify for, a lot of times you may qualify for something way up here. And then you have to think about what does that look like, as far as how much my monthly payment is going to be. When you start thinking about that, then you have to do some discipline for yourself. You don't want to go in house poor, and you want to be prepared for something that may happen down the road. um, it could be something that happens personally. You could get, affected by your job situation or what have you, or it could be something that happens in the home. The best decide, homes that you could decide on, something could go, could happen. We got a winter storm that just went on, and I can tell you that I have looked on Instagram, Facebook, TikTok, and everything else for all of the clues to make sure that my pipes don't burst or something doesn't happen. And but I also need to be prepared if something does happen. And so you want to have that discipline in your budget. And lastly, I would tell you, you got to work with a real estate professional, with someone that you've had some consultation with, that understands what your needs are, and not be afraid to go to discuss that with that person over and over again. It's okay, and it's okay if you look and find your own property and give it to them and let them do the homework on that property. A lot of times I've had clients that feel that I've sent them, ideas and homes that they may have looked for, but they've also seen some as well. So together we're a partnership, and together we help them find their dream home. When you are going through an inspection, or when after you've submitted your offer, there are a few steps. Regina, were you going to say something? Oh, sorry. There are a few steps that you want to take. I advise all my clients to have a home inspection because that protects you. Um, there are sometimes you will find in certain homes, it's going to say to you, um, as is. So as is does indicate that you're purchasing that home, regardless of whatever that inspection says. You got to be prepared to take it as is. But that does not prevent you from having a home inspection done. You should still do that and give yourself an opportunity to decide how much you want to invest on your own, or how much you don't want to invest on your own. Okay, so a home inspection, the process requires a licensed home inspector. It's a cost to you. So there's certain costs that you're going to pay up front. All right. You put in your offer, you're going to give a earnest money deposit. That's a certain amount of money that you say, I'm willing to put, that's my skin in the game. I'm willing to put that up. And that goes toward your closing cost, which could be your down payment, towards your down payment and toward your closing costs combined. Okay. In addition to that, there are certain fees that you're going to pay up front. A home inspection is one of them. It ranges anywhere from $400 to $600. And if you pay for one and that's not the home for you, you may have to pay for another one. So you want to have that money saved and ready as you start going to purchase a home. It's more than just how much you got to put down on the house. It's what other costs that are going to come up in front of as you start looking for your home. So that is something that you want to be prepared for. An appraisal, it protects the lender. needs, but it's required. Okay, there are many times that there are lender required repairs that have to take place, and of course, your realtor will guide you through this process as it comes down to that. But the appraisal tells you they are not looking at the same many of the same things that the home inspector is looking at. Home inspector is looking at, you know, problems that may come up there. The appraisal, he's also looking at, or she are also looking at problems, but they're looking at the value that of the investment, the value. So they're going to look at other properties that are in the area that have sold, and look at the market value, the current market value of that property in order to make certain that they are lending money that equates to the amount of money that the house is worth. Okay. Now I'm going to stop here and ask Azita to interject a little bit about the closing costs and the escrow process. And Azita, if there's some others that you want me to add to that, I'm happy to do that.
Sure. So I'm Azita Arvan. I'm with Passport Title. And just to give you a little background, I've been in the industry, in the real estate industry, for a little bit over 30 years. So, and I still learn every day new things that's happening, new information, new guidelines, just new. So don't ever feel like, that you know enough. So there's always new things to learn from your realtor, from your lender, from your title company, from everybody in the process. So I'm going to tell you a little bit about a title insurance company. So a title insurance company is behind the scenes protector of your home purchases. We dig through public records to make sure that the seller actually owns the property and there's no hidden liens, unpaid taxes, judgments, or claims. So no ownership disputes or legal issues are lurking around. And what we do if we find problems, we'll fix them. We'll fix the liens, we'll fix the judgments, old mortgages that are on record, we'll fix them, we'll clear them. We're going to make sure all that is clear before you're handed your keys to your new home. We handle the closing. We act as the closing settlement agent, which means that we prepare and review documents, collect and distribute funds from the buyer to the lender, from the seller to the seller. We record the deeds and mortgages, giving you the title of the home. Okay. So we are also the holder of your earnest money deposit. So once your offer is submitted and it's accepted, you are expected within a certain number of days, and it'll be explicit in your contract, 3 days, 5 days, 10 days, to turn over your earnest money deposit to the title company. So that shows your good faith, that you're in it, you're really serious about buying this house. You're going to give them $2,000, $5,000, $10,000. So we hold those funds, and we have to have those funds in our escrow account by the time that it says in your contract. So don't be late with that, right? Once we get the earnest money deposit, we will open the file. We will order the lien sheets, judgments, title searches. We'll order all that. We'll also communicate with your lender. We'll let them know that we're the title company. Please send us your title order. So we work hand in hand with your lender. We give them a report showing what open liens there are, if there's any judgments against the buyer, against the seller. We'll let them know what this property and the buyer and seller look like. So once we have the report to the lender goes through it. They'll let us know. They'll let the title company know once they're clear to close. So once you've submitted all your documents, your appraisal's done, you're good to go, your lender will give us the clear to close. At that time, we will schedule closing time and a date and time with your agent. So buyers and sellers typically come together to sign, but ever since COVID, sellers want to sign separately and buyers want to sign separately. So more than likely, you probably will not meet the sellers of your home. But if you would like to, we can request that a closing happen with both parties there. So once closing is scheduled, documents are received, we all meet at that specific time and location, and you start signing your closing documents. Now, I know there's horror stories out there that it takes hours and hours to go through a closing package and sign, which is not true. Closing usually takes anywhere from 30 minutes to 45 minutes. All the documents are explained to you. Um, you sign them, closing's done. Your agent will hand you your keys and you will be off to your new home to enjoy it. And then behind the scenes, of course, after closing, the title company will send those documents to your lender. We'll get a funding authorization. We'll record the deed and the mortgage, and we'll make sure that the house is in land records showing that you are the owner. Taxes, water, all those things will also be paid and current when you buy your home. No, there are any violations or any liens on the property, we'll take care of it at that time too. Okay, so it's title company is very important. We insure you with the owner's title insurance policy, and we also insure the lender that that's clear. There's no liens on the property. Title insurance policy will be purchased at closing for the lender by the buyer, and also an owner's title insurance for the buyer themselves. So there's two policies that you need to purchase at closing. And the fee for those policies are incorporated into your closing costs. So it's not any funds that you have to bring after closing. It's all incorporated. The money that you send to the title company for closing will include the title insurance policy. And the title insurance policy will last you for as long as you own the home. So it doesn't expire. It actually expires when you sell the home. So it's a fee that you'll never have to pay again, and it covers you for any title defects or deficiencies or forgeries or fraud or anything like that down the road for as long as you own the home, right? Wires are mandatory for closing funds. So once your lender tells you how much money you need for closing, we will send you wiring instructions to send the funds to us, the wire from your bank. Has to be a wire. We don't accept checks. I don't believe any title company nowadays accepts checks. So be aware of wire fraud. That is so big. I've had a few wire fraud transactions that have happened to my clients. And it's because the buyer did not do what we asked them. They did not call us before they sent their wire to us. So somebody hacked into their email, intercepted wiring instructions, put their own bank account on it. And the buyer actually sent, one time it was 30 some thousand, another time it was $8,000 to the fraudulent, the hackers. And so, and there's really nothing you can do about it. There's no way to get that money back. By the time you find out, it's too late. They've already gone through, 10 other banks and wired it all over the world. So you'll never get that money back. So just be aware of wire hacks, and make sure that you call the title company before you wire to make sure that you have the right wiring instructions. Right, and I think that's about it for the title company. Any questions that you have for me? Anyone?
I don't see any right now.
Okay.
Wow. Azita, what about certified checks, funds like money order, cashier's checks?
So for your earnest money deposit, you can do that, but not for closing funds, because when you give us a check, that check has to be deposited into our account, and it usually takes anywhere from a week to 2 weeks for those funds to clear. And so we need good funds on the day of closing, because everything has to be dispersed out. Sellers have to get their funds, mortgages have to be paid off, recordings have to take place. So we need all the money in a wire format. So the lender sends a wire for your loan proceeds. So we request a wire. So there's, sometimes we'll make an exception. So if you need like $200 or $300 at closing, yes, we're going to make an exception, and you can bring, a cashier's check. I think it's up to like $1,000 or something. You can bring a cashier's check, but anything over that, it just holds everything up, and we can't fund and disperse, and it's not good.
I'm curious if there are any things that you're seeing that are happening within the last 6 to 9 months during the escrow process that feels like it's a common thing that's going on that's holding up the process. I know as a realtor that it is not uncommon to have the dates be moved. A lot of times we have a closing date and everybody's got that set because it's in writing and it's set at the time that you put the offer in. And many times that gets moved maybe once or twice. And the buyers can sometimes be a little concerned about that, where it's not, because the whole process is overwhelming and they've gone through it. But it doesn't mean that it's going to fall through. Are you running into anything that you're seeing is common that people can, just sort of be aware of, and take the fear a little bit out of the process?
Well, I think buyers need to be prepared. So they need to listen to their lender and their real estate agent. Yes, all the time we have closings that get postponed a week out, 2 weeks out. And, sellers are panicking and their listing agents are panicking because, the seller needs to move and move on to their new house or need the funds to buy something else. So always be prepared. So if your lender gives you a list of documents that they need, please get that to them. Don't
Yeah.
wait 2 weeks, 3 weeks, because now you're pushing the date out that much. Is when your contract is written by your agent and they say 30 days or 45 days, they're going by as soon as the lender asks you for documents or if something's needed, you're going to give it to them right away, not waiting a week or two. So
Yeah.
make sure they need to communicate, because it's not, on our side, we have to deal with lenders and the listing agent and the sellers, and it's not a good time when you have to tell them that closing's postponed.
Yeah.
They get very upset because their lives are depending on it. It's not a game. It's not, playtime. I've seen recently that buyers will go in and they'll write a contract, and 3 or 4 days later they'll be like, "Oh, I don't like that house anymore. I want to buy something else." So, my thing is, don't play around with people's lives, because that's exactly what you're doing. When you write a contract, you have to be serious. So this is a big investment.
It is. I agree with that a lot. And it's happened to me with clients where, you can only take someone's word for it. I mean, you go through the preliminary process to make certain that they know what their wants are, what their needs are, that we know what our budget is, that all of those things. And you spend hours driving around and meeting and showing properties, and you can't do anything about it if they decide that it's not the home for them. And there are certain reasons where it's absolutely understandable, like it is not the home for you. And inspection sometimes gives you that information, really good information about that. And but this is a binding contract, the offer, and once it's accepted, it is a very serious thing. Someone has taken their home off the market from other people to be able to purchase it. You have made a good faith offer and effort by your earnest money deposit and your offer being written and accepted, signed by you and the buyer and the seller, that this is the property that you want. And so it's very important that that's taken totally seriously, because it's not about, well, I just changed my mind, and it's sort of a very difficult situation like that. And understanding that buying your first home can feel overwhelming, and and it is the largest investment, and not just your first home, but it could be your second home as you move on each time. This is a very large investment that we make. It's not the same as if you even purchasing a vehicle or a a dress, or a diamond ring or something like that. I mean, those are major investments as well. But buying or purchasing a home in the 100s, 200s, 300s, 400,000s, millions, $1.5 million is a huge investment for someone to make. And in the DMV area specifically, this is a very high cost market. Even though we're lucky that because of it, our wages are in that area as well. A lot of times it's not, in some areas what we would pay $300,000 for, you're not going to, you'll get more in a different market, a larger home. I'll say that, maybe not more, a larger home in different markets. So there is a lot to consider, and it does happen. So thanks for sharing that.
Sure. I think if they have a good realtor like yourself, a good lender, and they follow the steps and follow the advice, that they will get through it and they'll be able to purchase their home.
Yeah, yeah. So I want to tell you something, people, that help is available. Okay. Um, that's good news. That is good news, especially when you're raising a family and you're thinking about, as I just mentioned, this market that we're in the DC, Maryland, Virginia area. Even if you're in New Jersey or some other areas where the cost of living is higher than certain areas, certain states, and all. Not that that means anything because it's all relative, so wherever you are, it's a big investment. But the good news is in the Maryland, D.C., and Virginia area, there are programs that help with down payment assistance and grants and all. And so homeowner assistance programs, they're designed to reduce the upfront cost of buying a home. And so those programs, they help pay for your down payment. They help pay for closing costs. Some of the programs will help pay for both. And some of them can be you can stack them is what they're called. And your lender will know these programs. And you want to make certain that if you're in a certain area and you're looking at certain programs, that you're working with a lender that's approved for the programs and that's also aware and has worked through the programs. And it's okay to ask that question. Find that out because that's very, very helpful for you. So in Maryland, there's the Maryland Money Mortgage Program, and it's a starting point, and it offers 30-year fixed rate mortgages, down payment, and or closing cost assistance, and they're designed specifically for first-time buyers. So that means that you must be a first-time buyer, and that's within 5 years. I've heard people say 3 to 5 years, but I believe the programs are specific, and now they're moving up to 5 years. But if I'm not mistaken, the Maryland home ownership is no home ownership within the last 3 years. Okay, so that's something that you want to consider, and the home must be your primary residence. Okay, and you have to have the income and purchase price. There are limits that apply to that. And so you want to know what those limits are. And that's also for the DC, for other programs as well, not just the Maryland Money Program. Many of this is it's interchangeable, this information. And so a lot of times you also have to complete a home buyer education course. And these are good for you anyway. These home buyer education courses are really, really this added information. No matter how prepared you think you are, you go through this home buyer program and it helps you to assistance program, and it helps you to really confirm for yourself and make sure you're ready. It's going to help you pull out all of those pay stubs that you're going to need. It's going to help you to get those W-2s and your tax documents together. Any types of your bank statements. It's going to help you to go through those processes that you're going to need when you go to your lender to be prepared for. And it really makes a difference. Many families are surprised to learn that they qualify, even if they with modest incomes or limited savings. You can qualify for a lot of these programs. There's also your local county. There's additional help depending on where you're looking to buy. I know Montgomery County has one. So Prince George's County has a program that has assistance up to $50,000. And it's often structured as a 0% deferred. And some of the money may be even forgiven if you live in the home for a certain amount of time. So, for instance, at $50,000, if you stay in the home for 5 years, then you don't have to pay any of the money back if you decide to sell the home. A lot of this is only you only have to pay it back if you sell it. But a lot of these are very, very much grants, meaning it is money that you do not have to pay back at all. Anne Arundel County has a down payment and closing cost assistance. Again, typically deferred with no monthly payments. And these require, again, education counseling programs. And so it varies by location. You want to look at the counties that you're looking to purchase in, see what programs that they offer, and all of that. So now in DC, there is the HPAP. It's the Home Purchase Assistance Program. It helps first-time homebuyers in DC with down payment and closing costs. Again, it offers deferred interest-free loan to eligible buyers. And it can help significantly up to $202,000 for down payment and $4,000 for closing costs. Let me repeat that, $202,000 for down payment assistance. And so you can say, well, hey, I'm in DC and there's a nice, 3 bedroom that I'm looking at in a awesome community, and it is listed at $500,000. Well, guess what? You may only be having to mortgage half of that, if not, because $202,000, if you qualify, is really good. So again, first-time home buyer, not having a home within the first 3 years, within the past 3 years. It's got to be your primary residence in DC, and your household income has to meet the limitation requirements. So that's really great. And the DC Open Doors, again, it provides down payment assistance, closing costs, closing loan assistance, below market mortgages, loans through approved lenders. So you want to talk to your lenders about what programs that they are familiar with. Many of them have access to all of these programs. Okay. And again, your local county grants, you want to look into the areas that you're looking into moving in and what they offer. And also, I want to say, and especially in DC, if you work in the area, there's also programs for living and working near your home, and that's also in Maryland and Virginia as well. So you want to look at that. And then the Virginia housing, Virginia down payment assistance, it's a true grant. You don't repay any of it if you meet the program guidelines. So you want to know about that. Those grants can cover roughly 2 to 2.5% of the purchase price of the home towards your down payment when paired with eligible housing grants. So you got to be a first-time home buyer. You have to, it's got household income. It's going to vary with certain program limits, and Virginia housing approved loans for FHA and all. Okay, it often works in combination with those loans, and so those are ways that really can help you know that help is available, and you can, you can get into a home. So some of the common myths, and I just want to clear this up, is I need 20% down. That's myth, because you don't necessarily have to have that, especially as we talked about the FHA. My credit isn't good enough. Some of these loans, 580 is minimum credit score. I've even seen them sometimes lower. But again, I'm not a I lenders work with people and really can help you. And one other good thing about getting prepared, a lender can do a what if scenario, and they can look at something and give you an idea of, okay, so maybe we're not ready to buy within the next 30 days, but we're ready to buy within the next 60 days. We're ready to buy within the next 120 days. Or if you do this, that, and the other, you are ready to purchase within the next 6 months. So by the time school is out and all of those things, you're ready for the summer, start looking at purchasing a home. And then connecting with your realtors, we can start working with you even in between that time in looking at what's going on in the area and keeping you abreast of what's happening with interest rates, with the housing market, and all of those things. So it doesn't hurt to start now and getting yourself together. I made too much money for help. Again, these programs have very liberal income requirements and all. And so if you think that you can't qualify, you very well may. So it could be, hey, I make enough to be able to afford a nice monthly mortgage payment, but I haven't saved as much as I'd like to save up. And that helps. These programs can help with that, close the gap where that's concerned. All right. So next steps, in my opinion, are to review your credit. Many times if you have certain credit cards and things like that, you want to look at, hey, they have these programs that are aligned with the credit bureaus and all. And the lender can help take the myths out of the whole getting my credit pulled and all this stuff, because we worry about that. But when you're applying for a home loan, and a lot of times you can research your lenders, even, to find the best product for you, even after you've already been pre-qualified and what have you. You want to know that it's different than applying for a credit card at Macy's or somewhere else where it's a hard pull and all, yes. But the more, it doesn't affect your credit as severely having multiple lenders look at it, because credit bureaus understand that you're purchasing a home and it's a big purchase and all. And a lender can explain that a lot in more detail to you, and they can also tell you how long that credit report is good for, and during the process, so that you've got know what your window is. A lot of times it's 120 days or to 90 to 120 days that that report that's been pulled is good for, so that you don't have to keep having the report pulled every time you get, as you go into escrow and you go into the whole underwriting process and all. So you want to review your credit, see where I am. We talked a little bit about that debt to income ratio. You want to make certain that you don't have all this debt and that's eating up all the income that you have, because, or vice versa, that you don't have no credit and you haven't really invested in yourself at all. So a lender can work with you very much on that, and also talking to a realtor and exploring the programs that are available to you. So I want you to be encouraged. It's a journey, y'all. Home ownership isn't about being perfect. It's about being informed, prepared, and supported. And I'm so excited to have been a part of this with Why Not Inc. As we continue to prepare people for the new year. Regina, I'm going to sort of exit with that. If there are any questions, we're open to any questions. We're open to talking more about the home ownership process.
I do. Excuse me. I do have one question. And it's about student loans. That always seems to be a concern for most. And so, what is the ratio or the percentage of student loans that must be counted against your income?
That's a really good question. As I mentioned, I'm not a lender, and so I don't want to misinform anyone. But I believe it's low. I believe it's like 5% or something along those lines. It used to be a big dinger and all. But if you're doing a payment plan or on some kind of if you're paying the loans back and have not defaulted or running, it's not affecting your credit, because after, I believe it was March of 2025, it might have been May, where that forgiveness was over with, and they so it started reporting back to the credit bureaus. And so if you've been making some kind of payments on your student loans, then I know that lenders are working very much with buyers with that. And so I will tell you that take the fear out of that. And if you feel as if because I've got these student loans and that means that I can't afford a home, that's not the case, because many times people are purchasing homes with student loans. Every day people are purchasing with student loans and Parent Plus loans as well, by the way.
Thank you. That's the only question that I saw.
Okay. And I'm happy to follow up with that question. If there's, anything I can, talk to some of our trusted lenders and get, more information on that for anyone. We're very much happy to do that because questions are welcome. I wanted to just give you guys some information about how to reach, of course, Why Not? You can reach us through that. But also I put up on the screen my email address, my phone number, and the website for lomondugroup.com. I'm associated with Arla at Properties, Real Properties at Home. And so I'm happy to answer any questions. I welcome you to go onto our website. There are a lot of the programs that I mentioned today. Links to those programs are on my website as resources. So you can definitely find that. And definitely have partnered with Azita with Passport Title, and her information is on the screen as well. If you want to email her, I'm certain that she welcomes any questions as well.
Yes, I'm here to help.
So we definitely thank both of you for taking time out on a snowy Monday to give us this information about home ownership and the title. I did learn a few things about the title company. I didn't really know what it was that y'all did. I just knew that I had to pay money. And I knew that's where it went. So now I have a better understanding. So that's great. But
to help.
Thank you. I hope that everyone who's out there who's listening, and if you're interested in buying a home, please screenshot this page so that you have a resource that you can go to. to get information, to guide you through the process, and to even be your realtor and title company. So please use that. As always, we are humbled that, like I said, you took time out to be a part of this, because we know there are so many other things you could be doing, like sitting in front of the fireplace, probably making s'mores or something, because it's 1 degree outside. So we do appreciate that you take time to do this. For the rest of you, if you already do not follow Why Not Inc., please make sure you do so, because we have some exciting things for 2026 happening. Everything is on our Facebook page, Instagram, TikTok. Continue to follow us. Our next Parent Power series will be February 9th, and we will be talking about suffering in silence. We are going to dismantle the stigmas of mental health. We are going to dismantle the stigmas of mental health on February 9th with Miss Crystal Adair. So once again, it'll be a great time. I implore you to be here. You don't want to miss it. Until then, everyone stay safe and have a good evening.
Thank you so much.
Thank you.